Hello everyone, welcome to NIO Q4 Earnings live stream. Thanks for tuning in and thanks for those who have been already patiently waiting. I've been doing some background work here already, and let me know if you can hear me clearly, and just keep on posting comments. I will see them from time to time and walk you through first the news release regarding the earnings, give you my commentary and how I perceive it, and maybe also compare it now to my own expectations that I had. And after that, of course, we'll stay around for your Q&As. And so, let's dive into it. First of all, I mean, you know the news release, you can just get it, and I would actually recommend that you go to the Investors Relations page and sign up for their newsletters, their emails, so you get also the SEC filings and things like that. And let me just jump straight to the point here regarding my estimations, in case you have watched my video earlier today around what I am personally expecting. I was expecting 1.37 billion in vehicle sales. It came in higher, actually, at 1.44 billion. I was expecting 134 million in other sales, and it came in slightly lower, but over 100 million, so 107 million to be exact. And so the total revenues came actually in higher than my personal ones, still 1.5 billion-ish, so more or less the same, and actually also close to, let me check the guidance, they guided for 1.56 billion on the upper range, so pretty much at the very high side of their own guidance back then. But that's nothing unexpected, to be honest, because of course we know the cars that they're selling, the number, and back from that it's easy to derive it. What might be the news here is because the vehicle sales are actually coming in higher also than what I thought. The average sales price of the vehicles has been on average higher than I was expecting. I was expecting $55,000 on average sales price, but it's actually almost 58,000. And I think we have some remarks here in the news release about that. What else? The sales margin, or the vehicle margin, is also higher than I was expecting. I was expecting 19%. I was kind of thinking of a gradual increase again after the retooling of the factory, but it's almost 21% actually. However, they are much lower, I would say, on the gross margin than I was expecting. I was expecting almost 20%, but it's 17%. And this is also, I think, where the main talk now will happen. That's on the cost basis, research and development expenses. If I'm right here, that was almost 290 million. And I was already putting a large number on there, 190 million, because I was saying, like, look, they have 3 models coming up: the ES7, the ET7, which is now being launched, the ET5. And all of these models need to do something like the winter testing, summer testing, the factory trial runs, the engineers working on that, the software development for it. And so there's lots going on there. Plus, they are hiring like crazy, right? If you look at the LinkedIn hirings, they are, especially in Germany, actually, they are hiring lots of people. And this is actually where lots of these research and development expenses are coming in. And it's been already higher last quarter than this time. And this time it's once again even more. And actually NIO had guided, I think, coming into this year for around 500 million in research and development expenses for last year, 2021. But in the end, it came out much larger, and almost in Q4, almost, let's say, 300 million. So lots of R&D spending going on right now. And I would say this kind of fits to where NIO is at the current stage. They are busy bringing out new models, and I mean, that's part of the problem right now with the ES8, ES6, and so on, that these are older platforms, right? And so it's really important now for NIO to get these new platforms up and running, and having also the new factory, of course, then with NIO Park. And so I would say this is money good invested at this point. I don't mind it too much to being too high. However, in case that the output isn't great, let's say, like if they're not efficient with this money spending, then of course that would sound an alarm bell. The other one might be more critical here. This is selling and general and administrative expenses, which I said, okay, let's assume a big number here. Let's assume 300 million. And the reason for that was that I thought, okay, I've been building battery swap stations like crazy. Yeah, they have been expanding on this metric here. Where is it? The battery swap stations here. In Q4, they built 260 battery swap stations, whereas in Q3 they built 156. So a huge increase in the infrastructure build out, and arriving at 777 battery swap stations by the end of the year. So we don't really know still like how much is the exact cost of one battery swap station. And I think after having this report, but I need more time, I can actually make some calculations and arrive at a number that makes sense, where we can also see like going forward, how much will this cost. And because yeah, we've seen this ramp of battery swap stations in the previous quarters, like Q2, Q3, and we don't really know when the costs are occurring. Like, when do they have to pay? Maybe they have like 90 days payment terms at some times, right? And then, you know, like there might be a little bit of a lag here. And so it's not unsurprising that they are arriving here at a quite big number, 370 million. And yeah, this in total, you know, is coming down to lots of operating expenses there, in, well, a really huge number, and something which you could also say is very negative, right? NIO is spending a lot of money, and that's also what's in the Bailey Gifford prospectus, that NIO does have a capital intense scale up, at least. In other aspects, they're quite not so capital intense. For example, they're not building their own factories, and so this is also quite a lean model. However, they spend it on other factors, and so ultimately this resulted in a huge net loss here, which is quite high, $336 million US. And I was assuming only 230, so I was off here by a large margin. However, if I look here at the financial report, then let me check, where is the basic diluted loss per ADS? This is for the full year. This is Q4 maybe, is it? For the full year. Okay, let me check, where is the EPS, earnings per share. Share is here. That's a huge report here, because it's not only the Q4 numbers, but also the quarterly. So I need to make sure I get the right number here. So it is for the full year. I don't see the quarterly number. Maybe you can point me to that. Is it? Oh yeah, in the fourth quarter, here it is. The non-GAAP arrived at 16 cents loss, right? I hope I picked the right one here, but in that case, that's exactly actually also slightly more than the analysts have been estimating here at 14 cents. So more or less, if you look at the top line here with the revenues, as well as on the bottom line, it's kind of maybe what the market expected, and that may also explain why here post-market we are kind of not down or not up really big, just almost 1%. So yeah, that's kind of on the numbers there. And then I mentioned that one of the most important things, of course, is the outlook. And this is once again where NIO is a bit silent here. So they only give the first quarter outlook for deliveries between 25,000 and 26,000. And yeah, let's take they have just a couple of days back, right, until they're gonna deliver the March, announce the March deliveries. And so let's take the upper side, 26,000 vehicles. That would mean a March delivery of over 10,000 vehicles, actually. And yeah, I would say that's pretty much in line with what's to be expected. However, what I am missing, or we are possibly missing, is the Q2 guidance. And of course, that's because NIO is reporting so late. And in a way, that's smart and clever because it gives them more ways of managing those expectations. But of course, right now, we really want to know, the forward-looking statements. What can we expect? We know Q1 is almost over. Okay, 26,000 vehicles, might be another 1.5 billion. Yeah, 1.5 billion, similar to this quarter, 1.56 in revenue. So that's totally in line again. But we want to know what's happening in 2022, right? Because that's a big year. And I think we can find maybe something here in the CEO and CFO statement in this report. And hopefully we're going to hear even much more about this during the earnings call. But I guess that they're also, maybe once again a bit silent. Anyways, I found this sentence here quite interesting. 2022 will be a year of re-acceleration for NIO. So this is kind of acknowledging the fact that NIO had, well, in a way, it did slow down a little bit, or, I mean, that's kind of the narrative because the expectations have been so high for NIO. And on the other hand, you cannot blame NIO for missing, right? They have both on the financials, but also on the deliveries, they actually always delivered and actually pretty much to the high side of the guidance. However, I think many out there are seeing the current scale, for example, of Tesla, like how they are, they have entered the S-curve, like they are really already in this large growth phase, whereas NIO, of course, had impressive numbers in the very beginning already because coming out of bankruptcy and then scaling from a lower base makes it obviously easier to grow faster. But NIO is kind of still in this slope that isn't too steep and will only accelerate hopefully this year. And I think that's kind of the hint here by Li Bin, and he's saying yes, 2022 will be this year of where things are taken up again. And they're announcing, delivering 3 new products, the new platform, the NT 2.0 platform. In March, we kicked off the test drive of the ET7, all right, and we'll start delivery on March 28th. Also nothing new. Launch of the ET5 in December 2021, have received great feedback from prospective users and expect to start its delivery in September 2022. I think we will actually see a production kick off already in Q2. But it might be similar to what we've seen for the ET7. It seems like NIO is taking quite a bit of time for those reservation holders, test drives, making sure the mass production kicks off without any faults and so on. If you look at the industry reports, NIO is #1 of the Chinese players for quality. And I think only the European-made Volvos are beating them in terms of errors reported per, I think, 100 vehicles or something like that. So that's pretty impressive. But yeah, that's also the sense of why they might be slower in terms of the output. But as I also have explained in my previous videos, I am personally comparing them to BMW, Audi, and Mercedes, and not to low-cost brands, and certainly not to cars that have a oil consumption like Li Auto has, which I just saw that they're bringing out a new model, the L9 is it, I think, and it's having an oil consumption of almost 6 liters per 100 kilometers. So I don't know why people are investing in that and think it's an EV. It's not an EV. It's like almost consuming as much oil as my first car, and that's like insane. But I don't want to talk them down. They're having impressive quality in cars as well, and it's certainly a smart car. And I think the technology is maybe what gets investors excited, and also they're certainly delivering well. So, but anyways, back to NIO. In addition, we plan to offer our products and services in more countries. All right, these are more general remarks. And then also about Hong Kong. Yeah, I don't know. That's just the general swag here. And but this sentence really is something which I hope we'll hear more about in the earnings call, which will now come. And maybe they can give us some bullish hints about, let's say, the orders, and also maybe what kind of deliveries they are expecting in 2022. If they're speaking of a re-acceleration, maybe give us a hint. Will this be more gradual, maybe already in Q2 and Q3? Or will there be impacts? I mean, it's still crazy months of fear, uncertainties, and doubts, right? We have COVID, we have still semiconductor issues. Volkswagen and BMWs are closing plants in Europe because of the Ukraine war and impact. So I heard like 5 out of 7 European factories for BMW are closed or something like this. So I really hope, I have no idea whether or not they're sourcing from Ukraine, but I hope they're not impacted again. That would be really a blow to the outlook for 2022. And frankly, I also don't want any excuses in this area, but maybe this is something which cannot be avoided. Let's see. I hope in the earnings call they have something exciting for us. So what else? I think I gave you my opinion on most on these numbers, at least. Maybe there are some interesting more pieces, or also what else I can see from the comments. If you found anything, let me know in the comments that you think is exciting or not so exciting, or if you have any questions. Let me search for some more general remarks. Okay, these are about January and February. I think there's nothing important here. Completion of the at-the-market offering. Yeah, I think finally, in the end, we might be happy with the fact that I raised this at-the-market offering. And let me just check the cash position again. It should be around, yes, almost 9 billion in US dollars which I have raised. And I remember how upset people were when they raised it at around 35 US dollars. Who would have known that we get in such severe market turbulences, not only for Chinese stocks, but Chinese stocks in particular, but growth stocks in general as well. So if they would have to raise out of necessity now, that would be a huge issue. And I mean, like, if we're talking about the net loss, I mean, I mentioned like how kind of big it is, but it's just big in terms of compared to my expectations. But if you look at like on a relative level, that isn't too much. In case NIO is kind of scaling down on their battery swapping or infrastructure built out because they're reaching their targets, and also if research and development is becoming more smooth at some point in time, or less new models are launched at this pace, these numbers will certainly come down, and then we are getting very, very close to profitability. So I'm very sure that we will actually see at least one profitable quarter this year. So I'm not too concerned about this net loss here. And as I mentioned, it seems like Wall Street or the investor base has basically also calculated with these kind of bottom line results here. All right, what else? Yeah, I think somewhere they also mentioned infrastructure, particularly. Yeah, last year has been a making of decisive investments in products and technologies, as well as in power and service infrastructures. So yeah, I mean, like, this is exactly what also makes NIO different. They are building out the infrastructure, and I'm still, I would take those voices with a grain of salt that are saying that battery swapping is a huge burden on the company. I mean, sure, they are spending a lot of money right now in order to build this out, but in a way, in a sense, this is also marketing, right? The battery swap stations, like, if you watch them, people are kind of squatting in front of them watching. And I've heard actually similar stories about Norway, where there are superchargers, Tesla superchargers, Ionity, or similar European network chargers, and people, they are just watching the NIO go into the swap station and come out again. It's having some certain effect on people. It's certainly raising interest in the car and in the brand. And yeah, in China, we see the same thing always, also during the peak times like Chinese New Year. It's having certain advantages in comparison even to gasoline refueling, and certainly in comparison to supercharging in this regard. Not saying that battery swapping is the only way to go and the better way in every regard. However, I do have the feeling that even on the cost side, it might actually be quite competitive in the long run. I made some videos also about the prospects of the grid balancing mechanisms that this could play a role, and other factors that I think, once battery swapping is a thing and is working as an ecosystem, may actually not be that bad on the company. And so let's see. I'll certainly make those calculations in terms of if I can derive anything like those incremental costs for every unit built of the battery swap stations. And then I can give you more of an outlook for the future. And it seems like they are going like in waves, have been scaling those swap stations towards the end of the year. Anyways, I'm talking a lot right now. Let's look at some of the comments, because I have totally ignored you until now. Oh yeah, hey Martin, I know you. Thanks for watching, Martin, and shout out to Stuttgart or wherever you currently are. He's saying NIO cars have significant price drops due to the swapping. That would be my number one reason to buy one. Yeah, exactly. It's having some effects on the initial amount of money that you have to put down. And I mean, we're still in the early stages of EV adoption, to be frank, and many people can not afford a Tesla or certainly not afford a NIO. And yeah, there are question marks around whether or not NIO is also too expensive for China, for example. However, I mean, if you look at some numbers, just Beijing alone, Beijing as a city is selling more luxury cars a year than the entire Japanese market combined. So people have this feeling or sense that China, because it's a so-called communist country. It's kind of a poor place, but it's kind of the opposite. The thing is, like, the car needs to be appealing, so that it needs to have good technology. It needs to be like something people really want. Then there are certainly buyers for it almost at any price in China. So I would say it's a misconception to assume that Chinese need to buy cheap cars. And although Chinese are very price conscious, I'd say, and also, coming from a little bit of an e-commerce background, so pointing out to what Martin here says is exactly right, that it's also kind of a gamification element there, and Chinese really like this type of discounting and having the feeling that they get a better deal, and the fact that you just get a fully fledged, very nice quality EV there, with at a low initial price, and then you kind of, you are quite flexible in order to swap in the latest battery and technology. This is actually something quite clever, and we'll have to see whether or not this is also an attractive factor overseas, like, let's say, Germany in the future. Yes, I have been away. Sorry for that, Johnny. But if you watch my video, I've been actually sick in my bed during my vacation time in Mallorca, but now I'm back. What else? I've been invested in NIO since IPO. Unfortunately, it often drops after earnings. Good point. And I think we will need to see profitability before a sustained, serious upward movement. Yeah, that's actually a good point. Yeah, NIO's been selling off like crazy after lots of the earnings. And I mentioned it before, I remember well opening a bottle of champagne after 2022. Very good earnings that finally saw increased margins. And what happened? I think a 15% drop or something like this. But this was also followed by a huge run afterwards. And yeah, this is kind of, those early stage companies, and also, I don't know really how the market makers and the funds are playing us in some regards, or, this is just where you need to look at the fundamentals of the company and have a long-term view, and otherwise it's quite impossible to time those type of market movements, in my view. And yeah, I think what for NIO, I also say that once they are coming back to what Li Bin is mentioning here, this kind of re-acceleration for NIO, I think if this becomes visible, and that's why I'm also saying, like, well, actually what we want now is some sort of a better outlook or guidance. And once they give that, or once this is shown up in real, like in the numbers, then I'm pretty sure that we also see already the multiple, which has extremely compressed for NIO, to increase again. So this price to sales multiple, if you will. And I mean, there are various reasons for it. We had the Fed tightening, we have inflation, interest rates, we have a war. There's lots of things. I mean, growth stocks are out of favor. If you compare NIO, the stock price performance, I think on a yearly basis, to a US stock like Palantir, it's almost the same performance. So we are oftentimes trying to interpret too much into the actual stock price movements, maybe including myself. I'm sometimes, I do the same. And as a YouTuber, of course, I need to find some topics and also speak about it as well. But anyways, the markets sometimes in Wall Street, they work in miraculous ways. And sometimes this is also why investors may see something which Wall Street doesn't see yet, right? I think most of us, if you're following this channel, you may have a vision or goal for this company and are excited about the future about it, but that's not necessarily reflected in the current stock price. And so, yeah, the stock is not always the company is not always the stock. However, on the other hand, we also had, of course, a huge run with all the liquidity in 2020, and quite a sneak peek into the future of NIO in terms of what this company could ultimately be valued at in case that they really manage to execute on their vision. So yeah, you're right about that. Maybe another analogy is about Tesla. I remember well being, as I'm quite early in Tesla as well, and then 2018 it was such a horrible time being in Tesla. Lots of fear, uncertainty, and doubt, similar to currently with NIO. Some topics similar, some topics quite different. And then the Model 3 was launching, and it actually took quite some time, even after Model 3 was already in the market and very well perceived and having a good quarter. I think it took still a very long time until Tesla finally took off, and it was also heavily sold short. So yeah, lots of things are coming together. And so, I mean, for me, NIO is kind of a 5 to 10 years investment. And of course, I would love it to be back to the 65 immediately and then go into 100, 200, 300, if that's possible. But unfortunately, the market is working in different ways. And to be honest, I mean, we first have to navigate through quite a bit of uncertainty with delisting, US-China, Ukraine war, with how well is NIO actually executing in 2022? We need more than those words by the CEO. Now we need the numbers, we need the facts. So yeah, that's the thing. Do you think that NIO will be affected by the current COVID restrictions? Good point. So I mentioned that, well, the most of the COVID lockdowns are currently actually in Shenzhen, and that's not kind of the most important part for NIO. They have no factory there. They don't sell the most cars in Shenzhen. They are more like Shanghai is really important for them. Beijing is important. And so certainly there might be impacts, but also on the other hand, already in 2022, in 2020, I think they already had this contactless delivery already during the real lockdown in the beginning. And so, yeah, hopefully they are managing to kind of work around such issues. But of course, this may also have larger impacts in terms of the supply chain, the demand side, and things like that. Let's hope that won't be the case. It can also have the effects that the government will provide new subsidies, more stimulus, and people wanting to buy more cars, to be more flexible in a more private space. And on the other hand, it's just Omicron, which has proven to be less lethal, fortunately. And so we are seeing the first signs in China that are considering getting away from the zero COVID policy. And so in that case, this could quickly also turn into a catalyst in terms of, and I'm eagerly waiting for this moment that China is opening up again, allowing travel and possibly quitting quarantining. I think we need, maybe the population also needs this experience now with this new virus variant that possibly, it's not as bad. And maybe then this gives also the policymakers more of an excuse to kind of, ultimately getting away from this policy, I'd hope. Here's another question. Do you think growth stocks will perform poorly with interest rates rising this year, including NIO? Thanks for your question, Stephen. I have just made a Patreon post, actually. On Patreon, I'm doing like those long posts, more or less weekly. And in my last one, I pointed out that I'm actually seeing signs of bottoming out in the markets in general. I mean, I shouldn't be calling bottoms, to be honest, because I also tried in the past and miserably failed. However, what I'm actually seeing quite a few catalysts, and I do think that the market has priced a lot of this interest rates and tightening in already. And I do think, yes, we have certain liquidity issues in the market. For example, with the commodity spiking, there are issues in the bond markets with the treasuries as well. And I think sometimes maybe investors are kind of scrambling for liquidity, like some of the funds. And these are reasons why sometimes there is less demand in stocks, and that's why stocks going down. And ultimately, I do think that this sector has sold off so hard. So if you look at ARK Invest, ARKK, and those type of low profit or no profit stocks, growth stocks, which I am mostly invested in, honestly, I think they are showing some signs of bottoming out. And so I'm actually, I've been saying this on the channel as well. I started selling some of my positions in December last year. I kept on selling during January, mostly actually in some of the high growth US growth names, because I thought there might be a correction coming to the US only. Unfortunately, it also dragged down my Chinese growth stocks with them. So NIO wasn't an exemption there. And so I didn't manage to time it perfectly, but I managed to raise some cash. I sold most of my crypto as well. Crypto did not prove to be this inflation hedge at this point during the last couple of months, because I think the overall narrative was that if the Fed is really tightening and they're taking away liquidity, and then you take away this excess liquidity where it's not needed at most, right? And we're now going into a new business cycle, and then investors were looking for energy, finances, and those more traditional value assets as well as commodities now. So that's big. And long story short, I do think this current rally could be a little bit more than a bear market rally. I think this one has legs, and I wouldn't be surprised if we saw the bottom already in overall growth stocks. For the Chinese stocks, they are more volatile even than the US technology stocks, or as comparable volatile as, for example, a stock like Cloudflare, so ticker symbol NET, which I'm also owning. And actually one of the stocks which I entirely sold off in January, but now I'm back in, and actually managed to have some nice 30% gains on that one already. And this one is also super volatile. So on a down day, Cloudflare is totally getting destroyed, and but on an up day it's very volatile and also goes up a lot. And I see that the Chinese stocks mostly are also in the same basket. And in times where we don't have any negative news, and which is quite rare recently, in those times also the Chinese stocks are going quite well. And actually, if we look at maybe something here like KWeb's been doing quite well recently. If we compare it even to, what is it? This is the, of course, we have this huge dip here, which hopefully was exhaustion in the end. But if we are comparing it to something like the QQQ, so that's NASDAQ, on a year-to-date basis, I need to go to the performance chart. Sorry about that. QQQ and year-to-date. So KWeb, by the way, and I'm not affiliated, is from Crane Shares, an ETF for Chinese tech stocks. And if you look here, of course, it had this huge sell-off, which, I mean, if you're watching this channel, you know what this was all about. Then Liu He saved us and back up, and it's now almost comparable to, well, still 5% minus difference here, but almost doing as well as the US growth names if you compare that one to Now the ARK funds, it's down way more, significantly more. And so it's interesting to see that despite this very hostile environment for Chinese stocks right now, it's doing considerably well. But if there's more overhang, like more negative news, and we've seen today another story about this delisting stuff. I mean, it's now ping pong. It's now back and forth. Let's hope they can get it done before June or July, which CSRC has announced. That would be great. But expect this to really still have some negative impacts. So what else? Let me take some more questions. And that's an interesting one by David. If you want to park your money somewhere relatively safe, but with decent growth possibilities, Berkshire Hathaway. Yeah, that's interesting because I just saw, let me check if I can put this up here. I think on a long enough timeline here, let's put up 3 years. That's amazing. I mean, like everyone said, like value investing is dead, but the yellow line that you can see here, oops, let me remove the comment here. The yellow line is Berkshire Hathaway, and they have now overtaken ARK Invest on a 3-year performance, maybe even a 2-year performance as well. I don't have it in here. But still, if you would just put your money in QQQ, it's doing considerably better as well. But good point. Yeah, that might be a safe haven. It's doing quite well recently. However, I wouldn't also underestimate ARK Invest here or their funds. These kind of growth strategies, as I've mentioned, have been beaten up a lot, and they are more volatile, which means if the market is going up, these stocks will certainly outperform, and then you want to be in ARK and not in Berkshire. So, yeah. What else? Guys, give me your questions. Anything specific to the earnings or just in general? Okay, nice one. I like this question. What are your thoughts on other revenues? That's a really good question. Thank you, Dennis. And yeah, I mentioned like I was hoping for 130 million, and I knew that this was kind of a big expectation to have, because I know it's a huge jump. Previously, we were averaging around 80 to 90 million in other sales. And whoops. And so 107 is actually quite good. It's showing some underlying growth in, could be many things. I'm hoping it will be e-commerce. That's actually one of the revenue streams that I see growing big. And we're seeing some signs there also if you're watching the Chinese app. But it could also be battery upgrades, like people are switching their battery plans to, let's say, the 100 kilowatt hour battery. It could be other fees, like for charging, for battery swapping, things like that. So overall, I would say, despite that this number came in lower than my hopeful estimations here, I think it's still showing progress and growth, which is good. And that must be without any regulatory credits here, I'd say. Credits. Yeah, because those credits have been sold in the 3rd quarter. Yep. I can't see anything that they had other credits to sell in the fourth quarter. I mean, they are accumulating credits surely, but they're always looking to time the markets for also getting the highest return on these credits, because there are phases where there's more competition with other companies like Tesla, for example, selling those credits as well. And yeah, so I'd say overall this should be a good number. The 108 in other sales. I'm pretty pleased with that. Here's a question. It doesn't seem like battery as a service is having much of an effect on sales. Is battery as a service maybe not as innovative as we expected it to be? I'm not sure if you're referring to the question of like sales in terms of driving vehicle sales or the actual revenues. The thing is, like the monthly revenues, they are going into a separate company, the battery asset management company, in which NIO has a stake in. That will get consolidated with NIO, and I'll have to take a deeper look into the specifics. They may show it explicitly in the annual report, which they are now about to file. And so cannot be said much right now about the subscriptions there and those kind of revenues. And in terms of what kind of effects that they're having on sales, I think overall they're having a pretty positive effect on the sales, because as you see, those average sales prices are quite high for NIO cars, and that's because they have a certain build quality. And then it's amazing to have a 20% gross margin, vehicle margin on such high average sales prices. And this is only going to increase to, I think the guidance was 25% with the latest vehicle platform. And so at the same time, given, like Martin said in the comment in the beginning, those people an opportunity to also buy a NIO that may not be able to have the overall purchasing power to even go full steam and pay it all in cash. And at the same time, I think one of those benefits, most of those benefits are also non-pecuniary, in terms of that it's giving people flexibility, upgradability, things like that. So but yeah, I mean, like the outlook also needs to be more bullish on 2022, the next quarter, and so on. So that's when we also can finally have a judgment of is this something that enables also kind of a broader scope of adoption of NIO vehicles in China and beyond. Interestingly, in China, the take rate of BIS is actually lower than, for example, in Norway, where people have much more money on average if you look at the per capita income. So yeah, we'll have earnings call coming up in 45 minutes. Maybe I can cover it here as well. But that would mean I have to talk 45 minutes more. Let's see if I have some more interesting comments maybe earlier to talk about. Okay, here's somebody concerned about the net loss attributable. Wow, I'm getting already sleepy here. Yes, of course, nobody likes to see net losses increasing. And as I mentioned, it's been a higher net loss than I personally expected, although not much of a higher net loss than the analysts and the market has expected, it seems. And I think I put it in context before, like it is absolutely a big increase right now, but in relation to where this company is, and where it's going. I mean, in a few quarters, nobody will look at this. Martin is very bullish on the ET5. I'm as well, because I know Miriam certainly wants to get one. All right, that one is a good one. Oh man, we have so many topics which are fear and uncertainty around NIO these days. And that one is actually coming from a fellow YouTuber, I think, from Mr. P, with NIO software and LiDAR not ready. And actually, I made a video about this also before, and maybe some people didn't really watch it, or I don't know, they thought I'm also reiterating this type of argument, and I'm totally not. I think what we've seen is that in the test drives, not the entire software was finalized yet, which seems that NIO is quite busy of getting to the final stages on having the final build on the software, which is obviously not great, not ideal, but I think they will possibly have it ready by the 28th of when the first deliveries are starting. And regarding the LiDAR, this argument doesn't make sense at all, because this was clear from the beginning. The NIO Autonomous Driving, the NAD subscription, which is on top of a NIO Pilot and those kind of adders, like the assisted driving capabilities, will actually be launched in Q4 or next year, Q1. So this will be a software update in the future, and wasn't promised to be right from the beginning with the launch of the ET7. And this one also in the future will be iterative, similar to what you can see with Tesla, like with the full self-driving. And so expect increases with each of these software updates. But right now, it is totally clear that the LiDAR isn't currently being used in the initial release. So that's that, I don't know, how can you make an argument about this? If somebody really closely following NIO, and yeah, then that should be quite clear, actually. So I'm still scrolling through the comments here. Let's see. I think we talked most of the points, actually. Yeah, I also saw that Mr. P said that the stock will drop to $8, and you know, nobody knows anything. The thing is, like, I saw all of the stuff about, oh, this gap needs to close, that gap needs to be filled, and whatever. But you know, you also need to be a bit careful. I recently pointed that one out on Twitter. I'm receiving lots of direct messages where people at some certain periods in time, first of all, come up with some price targets, and I see many comments, first of all on my tweets, but also in my inbox and also on my YouTube videos, sometimes coming up with, oh, NIO's going to $8 to $10. And you wouldn't believe what's possible in the world of finances. I'm not saying that, well, maybe I need to take off my tinfoil hat here, but things are happening and are manufactured in some ways. So be cautious about if there are things like this popping up from time to time. I think this is something we need to be cautious about. And in hedge funds, they know that NIO has lots of retail investors. I think when NIO dropped to $13, lots of retail investors got wiped out, certainly those who've been on margin. and we see lots of trades are happening in the dark pool, sometimes more than 60% of the volume, so in big block trades. I don't know, I don't want to spin this into a conspiracy, but just be aware that NIO is at focus of many things like competitors, the financial industry, and even more. So you need to be really convinced in that. And frankly, there's lots of risk in NIO also. I don't want to say that this is going to certainly to price target X or whatever. There's risk in there. Delisting risk is real. US-China risk is real. So you need to know how much of your money you want to allocate to this opportunity. And yeah. So seems like post-market we didn't have any big move. It's also quite different than the previous times. This is an interesting question here from Thomas regarding how much NIO has to pay for taxes to sell in the EU, and how will this impact gross margin? Yes, actually, I think NIO may be, well, they may have to mark up their prices in the EU if they're starting importing them. That's why I went to Norway first, because Norway is not in the EU, and that's actually having no import tax. And this will be different for the EU. And I'm actually planning on a video going more into detail of that, but well, I can give you a spoiler, but I think NIO should actually copy Tesla in the move of having a factory on all of the continents. And it doesn't have to be their own factory. They can continue in this partnership model. And I think they should have a factory in the EU. And I think they should have a factory in the US. And in the EU, we've seen those rumors before about the factory in Poland, about the hiring. That hiring disappeared on LinkedIn. But I saw another one later on, which maybe was more related to battery swapping. But I think there is something going on. And anyways, we'll make a video about that. And then also we have Detroit in the US, lots of capacity there, or other factories that are maybe not used as much, where NIO, I think, hopefully could, in a partnership model, do something there. And also, frankly, with all of these issues around geopolitics going on, if they can show that they're creating local jobs and do it in a partnership model, I think that would be the way to go, also in a kind of a political sensitive way of doing that. Okay, one more question about what happened to my girl. She is still around, and but she's not doing videos often. She's from time to time doing videos in my Patreon, in our Patreon, where she's more focused on the business models. These are longer videos, like 20 to 40 minutes long. And yeah, currently I'm running the channel here, and she's busy with some consulting projects also in different areas to do with China, because we sometimes get inquiries about, companies want to learn about China, about technology in China, about the market, and we are advising them. What else? This one is a new question. Marcel, would you like a share buyback from NIO at these levels, or you prefer to spend their money on expanding and more research and development? Okay, to be fair, of course, I would like to see a share buyback as a shareholder, because that would be good for the stock. But I don't think it's necessary, and I think it's also very unlikely. What we've seen is, I pointed that one out, is that Li Bin, personally, the CEO, has been buying shares of NIO during the recent downturn, although not many. And I'm not quite sure if this is just exercising some options. But anyways, in comparison to the XPeng CEO who sold, I think, around 1/3 of his position. That's quite a difference there. And so I think Li Bin, he really has also this long-term view, and you know, he's been going through this experience of almost being bankrupt. I mean, and I remember crunching those numbers when NIO had like maybe 200 million in cash left, and now they're at almost 9 billion. So what a difference that makes. And as I mentioned, I think NIO has a clear path to profitability and could show the first profitable quarters in this year already. But till a full year of profits, it may take some time. And then you also need to understand where Li Bin is coming from. He is a internet entrepreneur. So he's not a traditional car manufacturing CEO. So he's not coming from the automotive industry. He's been building internet platforms and more like e-commerce, social media businesses. And this is a certain type of thinking that he has. And that's why I also saw some comments around his thinking about battery swapping, where he said, like, no, this is an investment which we need to take. And we'll take it as long as it takes, just in order to build it out. And actually, lots of Chinese companies operate like that. They are very, very, very quick at blitz scaling, like very fast at building out infrastructure or stores. And they usually do that in the initial stages at not taking too much caution about cost. And this can be kind of counterintuitive, especially as an American investor or a Western investor in general, where you are like more cost conscious and you are not used to scaling that fast. But in China, that's really necessary because it's kind of sometimes the only way how you can win against competition. And now in China, there's two companies who are really building out infrastructure. It's Tesla and it's NIO. XPeng is building some superchargers here and there, but it's nowhere close. And of course, China also always has these different policies, industry policies, and battery swapping is one of those, which doesn't mean that they are, directly supporting NIO because of that, but their goal is to build more than 25,000 battery swap stations in China. And so who's doing that? It's NIO, it's CATL in the future, it's Geely, it's some other state-owned companies. And so I think that's where they see the opportunity, and they are really scaling into that. And so I think they will see that it's similar to Amazon in a way that they see internally the different unit economics and the different metrics. For example, user happiness, churn rates in terms of how many people are deinstalling the app, the swapping, the utilization, the adoption of that. And with that, they know the healthiness of the business. But because we only get those kind of financial reports, we don't necessarily see those kind of metrics, right? And we can be lucky if they at some point talk about that and some tidbits in the earnings calls. And this means that maybe the financials will actually look less healthy than what's actually happening under the hood. And I think this is deriving very much so from this internet platform business thinking. And this is why I'm also always saying that NIO is more like a platform business and an ecosystem than a traditional car business as well. And this is also why I think, traditional auto manufacturers will have a hard time wrapping their heads around this, how this all works. And, then you will get those very strong network effects, which you find typically in platform business models. And they will not show for some time. But then when they kick in, this is such a big moat and something that no competitor will be able to break in at some point in time. And let's hope they can get there. I mean, that's what I see in this company and why I also invest in it, in addition to investing in Tesla. I think it's very, very unique what NIO is doing. It's quite different to Tesla. Most people, also particularly Tesla investors, are watching NIO and think that this is just some new kind of competitor for Tesla, and they're trying to do the same thing as Tesla. And I don't think really that they're doing this. I think really that Xpeng is much more trying to copycat Tesla there, and I'm not sure actually how well they can do, given how good Tesla is actually doing also in China. And Tesla is very good at the manufacturing point, at scaling. So for me, long story short, NIO is more like an Audi or a BMW, and will be typical like that also maybe in the future once it's grown up between 1 million to 3 million in annual output and capacity. That's where I'm aiming at. Whereas Tesla is more like a new Volkswagen at some point in time, where they're really aiming for the big volume. And yeah, I'm not sure. I'm skeptical, to be honest, about those 20 million annual targets. I think that's a bit over the top, and I have some questions regarding the latest remarks by Elon Musk about what he said in the earnings call about the $25,000 car and Tesla's strategy there with only those handful of models there. But let's see, the master plan, the new one, is coming out soon, and hopefully get more detail on that. Yeah, very good question here, and I like to take that one. Do NIO houses make money? Are they worth, in terms of sustainable business model, what visible outcomes those houses can bring to the business? They would cost a lot of money. Yeah, I agree. And I cannot tell you that I have a final opinion on that, other than, let me say this. I think NIO has achieved something that no other Chinese brand could have achieved, which is positioning amongst Audi, BMW, and Mercedes, something which traditionally wealthy Chinese have been buying from overseas because it's carrying a certain brand. And what NIO, I think, is trying to do is they are this fresh new thing, which is very geared towards this new Chinese way of life. And there are new kind of factors that are playing a role. For example, a better me, living more healthy, spending time educating themselves, and being among a community and peers. And you see all these elements in NIO Life, right? And the NIO House is one part of it. I cannot say that I've done a lot of due diligence in terms of what could be the revenue part of those NIO houses and how much of the cost does it add. But what I can certainly say is that in China, sometimes you need to have those impressive things, like similar to an Apple store, or also those main venues, like at a certain place in the city that is impressing people. And so I think that's how NIO has started to create this kind of a brand image. And I think this brand will ultimately have a really high goodwill in terms of, this is something hard to copy, hard to achieve. So I see no way, for example, how Xpeng can achieve the same thing going forward. NIO can always, start a mass market brand or start selling lower cost models, and people will want to buy this because it will also reflect this brand image. But can Xpeng reach out to customers that are affluent, like NIO users? That will be quite different in contrast, I'd say. And so this is one of the purposes of those NIO houses. And then what I'm really interested in is like how they will bring them to Europe. And I think one of the challenges is, of course, Chinese is not good. It's copycat, it's low quality. Now, that's the stereotypical thinking about China in Europe and the Western world in general. And so suddenly you have those big NIO houses, like really sleek design, nice brand, at like the key property area, really good location. And that's also suddenly gives a certain impression, and people are starting wondering. And now in Copenhagen, people are now walking into those stores and are impressed. And that's the first impression that you get of this brand. And it doesn't sound Chinese, and it's quite different. So this may be an aspect of actually also being able to scale overseas. And NIO has been kind of designed from scratch and at the very beginning as a global brand. So that's why they have the offices in Munich, in the UK, in the US, and so on. And they're not like the other Chinese brands who are now starting to make offices there, right? They had it from the very beginning. And so it's a very different DNA which this is carrying. And I also made this other video the other day about, for example, XPeng, possibly, if I'm right with my research there, may have up to 2 years until they are able to sell cars in the EU, notably not in Norway, that's not in the EU where they're selling, but in the EU, they need to do something called homologation, which means they need certain certifications for the hardware. And this needs to get some certificates without which they cannot sell. And NIO has done this with the ES8, and the ET7 is going to launch by the end of this year in Germany as well. So they have thought about this from the very beginning. So let's see. I think lots of these things have a long-term plan and were like kind of planned from the very beginning. I cannot 100% say that NIO houses will turn into a profit center, but these are some aspects where I see that are certainly benefiting NIO and are kind of, in a way, marketing expenses. And then another thing which I find quite interesting is around NIO Europe and who they have hired, which is the previous general manager of Airbnb in Europe. And interestingly, he was my startup mentor when I started our own company. Alexander, he was mentoring our startup. He was back then still at Airbnb, and before that he was at PayPal. And you can see it by the fact that NIO is hiring somebody who has worked at PayPal and Airbnb before. Now, this is a different type of thinking. They're not hiring a automotive executive for this role. And so we'll see what NIO will do with those NIO houses. We have a big movement now to work from home, to not be present at the company. And maybe, this will also create a new lifestyle of going to NIO houses or similar places and work from there and have a nice coffee, be in a nice prime location and enjoy something. So there might be ways of NIO/Airbnb/WeWork type of thing to happen, but that's also quite looking forward there already. Yeah, it's also an interesting one. Do you think NIO may have a joint venture with Ford? It was the Ford CEO, right? Or was it General Motors? To be honest, I'm not watching those US companies too much. But in their remarks, they were speaking quite positively about NIO, right? And I don't know. I'm not a big fan of such partnerships in terms of if they would really, work on models together in terms building their own cars together. I'm not sure if this would be a good idea, because usually, those car automakers, the legacy automakers, they have real issues with catching up, and they have their own issues. Like, what's your incentive as a NIO to partner up with them? What does Ford have for them that NIO doesn't have? Maybe on the manufacturing side, that this could be the partnership model for building cars, NIO cars in the US. That might be a way. We also have this closeness between NIO and Volkswagen. where my conspiracy theory would still be what's happening there. Is NIO a stealth startup by Volkswagen? They had a chance to buy NIO when it was a 3 billion, 4 billion company. They didn't do it. Now Volkswagen is investing $70 billion US. Could have been so much more easy, but they have this closeness also with the JAC plant and what they're doing in Hefei. But yeah, my view is still that these are separate things. It's a misconception that JAC is also owned by Volkswagen. The JAC and NIO company is a different company than JAC. So yeah, not the biggest fan of those type of corporations. On the other hand, in terms of partnership, like it seems like Ford is starting to use NIO infrastructure in China for the supercharging, because of course NIO is also building out this infrastructure, the supercharging infrastructure. And I would say generally from the business model setup, NIO really is set up in a way to be very flexible, be open-minded. They are not like Tesla, focusing very much on taking everybody else's market share and kind of focusing only on their own thing. I think NIO with this ecosystem and network effects has many angles where they could potentially tap in and work with other partners, maybe just sharing their own charging infrastructure. And then, of course, the big black box and question mark is also about this whole battery swapping thing, where NIO on purpose has made it an external company so that others could possibly join. And now we're seeing that CATL is doing something there. We don't know the exact details on both the technology side as well as on the company setup side. Only thing for sure is that CATL is also invested in this NIO battery asset management company, and those battery swap stations look pretty damn close to what NIO has patented as well. But then this chocolate batteries that are going in there look a bit different to what NIO has, of course. But as I've pointed out also in one of my videos, NIO has filed some patent applications which not only were about introducing 800-volt charging infrastructure, possibly bringing that one to battery swapping and the charging infrastructure in general, as well as the vehicle architecture, but also seems to be introducing such kind of a modular battery swap, which means that ultimately you could also have a very tiny module only in the car. Let's say you're only driving in the city, you only need 150 kilometers of range. You could certainly pay less. That's very good on an ecosystem level, that you need less batteries. Not every car needs to have a 100 kilowatt hour battery, certainly not when it's only standing around. So you could have, for these close trips, the smaller battery modules in there, and then swap in a larger battery in case you need to make a long distance road trip, right? So enormous effects there, which could play out also on a partnership and ecosystem level there. So that's quite interesting, I think. Yeah, the NIO-Apple partnership. I mean, like I made the video actually before NIO Day, right? And said like how I think that this partnership is actually not very likely on the fundamental terms. However, there are so many hints and overlaps. But I mean, this is an ongoing thing. I mean, like Apple is kind of in a romance with everybody, right? With Lucid, with Porsche was just the latest rumor. And yeah, certainly, I mean, like if you could argue that NIO certainly is also playing the Apple playbook in many ways. So they're certainly learning from that. I mean, the NIO houses certainly are looking like Apple stores, right? And also I would say that the NIO cars are some of the sleekest designs that you will find out there. The quality is very nice. But I mean, the bigger question mark is, what does Apple bring to the table? They've hired lots of Tesla engineers, ex-NIO engineers too, but what will be their USP? Will they bring a nicely designed car, or will they focus on the autonomy part of things? And then on the autonomy side, how will they be able to beat Tesla in terms of miles collected, the neural networks, the computers that are calculating all of the data sets that they're having, all of these things that Apple seemingly doesn't have in place. So lots of question marks in general about the Apple car, I'd say. Yeah, the BYD rumor is another one. I mean, that one isn't a stupid rumor, right? In terms of there seems to be something to it. We've seen those pictures of Li Bin and the CEO, I think, of BYD also meeting at actually a NIO house, or at the Hefei production site, I think, which also has a NIO house. And it might be for the mass market brand, and it might be also on the battery side. I think NIO might be interested also in the LFPs, the plate batteries by BYD. May want to also, diversify a little bit. They have CATL, of course, as a huge producer for batteries, but the solid-state batteries will be coming from WeLion, a Beijing-based company in which NIO has a stake in. So that's already the second company. Then maybe I forgot the name of the other one. There's another company that's building a factory close to the NIO Park, and we'll see who will be the one in NIO Park that's actually providing the battery. But maybe BYD won't be a bad idea to partner up with them also on the battery side. But then NIO, I think, is also poised with their capabilities, certainly, which they certainly have in the area of vehicle design and engineering. And BYD, in my views, certainly lacking that one. There might be a way that NIO actually does something similar that they've done previously with the NIO Hycan. I think that was GAC. Maybe doing something similar, coming up with a new brand that is kind of designed by NIO, but, for example, manufactured by BYD, and then some deal on the battery side. We'll see what BYD has to say about battery swapping in general. So yeah, lots of things going on, and I'd say, yeah, the BYD rumor is certainly something to have a closer look, more than Volkswagen, more than Ford, and certainly more than Apple. What else? What do I think about the stock tomorrow? Yeah, the after hour is really neutral. That's correct. Well, it's down 1% now. I think we'll get lots more flavor, lots more what the investors are actually looking at the earnings call. So that's the real deal, not so much this report. As I mentioned, it's largely in line. It's largely what the investors have been expecting. So yeah, there might be news in the earnings call, but unfortunately, my feeling is that NIO will not say too much, and then this will kind of keep investors also stay maybe defensive on NIO so far, not going too big on it yet until they get more validation. Because frankly, what could happen is NIO could obviously have a terrible Q2, a failed ET7 launch, could fail miserably to scale in 2022, and then, well, personally, I would say NIO is currently priced for that, but it certainly could also sell off more. We have the delisting fear, so in case that pressure is intensifying, NIO could also sell off more. And so even we have now the Hong Kong listing, which means that in case that NIO gets delisted from the US, automatically Hong Kong is becoming the primary listing place, which means if you have a broker that can sell and buy shares in Hong Kong, then you can just convert your shares to Hong Kong shares, and then you can just continue holding and buying and selling NIO shares in Hong Kong instead of New York. Not much difference, actually. And the case of Luckin Coffee has proved that after delisting, a company can recover the stock price. Tencent is not listed in the US. I mean, there are various examples how companies that are not listed in the US are doing well and are highly valued. There are companies that have made a new listing in China and are valued 2 to 4 times the valuation that they're getting in the US. So this argument that a US listing is required for liquidity, for volume, for high valuations, I'm not buying that anymore. And so although, of course, like delisting news, like bad news, and if institutions need to get out quickly because they cannot, for example, hold Hong Kong shares, this will dramatically depress the stock price, that's for sure. So this may have effects. So you need to think about your personal risk allocation, whether or not you think you could stomach such a drawdown, which might be temporary. I think it would actually recover, but that's just my views. It may actually not. Who knows? Maybe investors in Hong Kong wouldn't have any appetite for one of the most sexy EV manufacturers in the world that's growing really nice. Maybe they don't like that. Maybe they would just pay 5 billion for that in company valuation. I don't know. Everything can happen. Yeah, you're right, Richard. Tencent is OTC in the US. So it would certainly have effects in terms of the volume. Lots of institutions wouldn't be able to trade in Hong Kong. There's lower volume in Hong Kong, things like that. But yeah, there are also other options like the stock connects to Switzerland, to the UK, to Germany. All of that is coming out. So we'll see. It's definitely, NIO is a risky stock. I don't want to say anything else. Yeah, here's another take similar to what I said. NIO House has played a major role in shaping up the brand image. It's a huge intangible asset. And Lei Zheng, from the name, I would assume you're Chinese, maybe not native, I'm not sure. But I think particularly in the eyes of Chinese, this is kind of, it's having some connotation. So it's maybe hard to grasp from a Western perspective, but it certainly played a role why NIO was able to reach today $57,765 in average sales price. So that's a big one. And again, like those average sales prices, of course, maybe smaller brands, cheaper brands are growing their sales in absolute numbers higher and quicker, but they also have to, because NIO is just making more money on one unit and then having even a higher gross vehicle margin. And so a higher margin from a higher average sales price also means more money going down to the bottom line. So that's why they also can afford stuff like this in the future. Here are some questions about leap calls. Once again, I'm not a financial advisor. I cannot give you financial advice. Also, in general, this is no recommendation to what you should do. And I don't have the full answer here. What I think will happen and what I've heard is that basically you keep the calls and you can just sell them. So you're not able to buy more, but those will trade at the value which they have, and you can basically sell them off, or possibly you can even still exercise them in shares. Exactly. The factory in Europe would help. Well, I'm not sure with margins, maybe with gross margins, maybe not so much with vehicle margins, because I think it's always cheaper to produce in China, where they have a cheaper labor cost, but they wouldn't have to pay the import fee. Might be implications in the end, and because then NIO wouldn't have to have such a high markup on the pricing and things like that. And ultimately, it's opening up a higher total addressable market if they can keep the prices a bit more similar to the Chinese prices. We'll see what will be their pricing strategy. And another point is what they could possibly do is maybe have like a certain type of the manufacturing taking place in China, let's say the EV skateboard, and having that one assembled, and then shipped that one already assembled thing to Europe, and have a plant where they do just some finalization. I think that's something which other companies also do. And then just because you're just sending over an unfinished good, that means that you don't have to import a finished good into the European Union, so you don't have to pay those same import fees or taxes. So that might be a way for NIO of getting around that. And so I'm hoping that they're doing that. Would fit really well into the strategy of NIO. And as I mentioned, I'm going to do a video on that as well. All right, here's a happy seller of NIO. He sold 15 months ago. So we should all give him a follow because he timed the market perfectly and sold right at the peak, which is amazing. So congratulations, Hardwood. And you're saying it's unlikely to go above $30 a share once worldwide EV competition ramps up. Too many legacy companies to compete with. And yeah, well, I kind of disagree with that. As I mentioned before, my business case for NIO assumes that NIO is going to 1 to 3 million annual production, and with that can have a highly profitable business with NIO's margins plus the additional service and e-commerce fees. And based on that, I think I still think that looking at the prospectus by Bailey Gifford with the price target of $300 billion valuation, I wouldn't say that this is impossible. It certainly depends also on things like the multiples, which we have seen decreasing dramatically. NIO, of course, needs to execute on that. They need to be able to get those revenues that are software side, that are high margin. I think that's what NIO is bringing to the table, very much in contrast to the legacy automotive companies that this commentator here is mentioning. I don't see them being successful at that, frankly. In many consulting projects with some of these companies, I'm coming from this industry, and I've seen like how difficult it is to, bring something successful on the table on that in this regard. And so I think Tesla is really doing really, really well in terms of being, I would say, 3 to 5 years ahead. NIO is also, if they are having a successful ET7 and ET5 launch, then I think they are also very much ahead of, let's say, the competitors like Audi. If you look at the code name is, what is the Artemis or something like this, the code name for their smart car, which they're about to launch. And I think it might be ramping production in 2025. That will be the car which has then also autonomous driving capabilities, this a new in-car experience software side and stuff like that. And so it's still taking a long time. And so I do think, yeah, this is where NIO has a unique advantage, and I don't see legacy companies having an issue, or NIO having an issue there with legacy companies. In fact, I do think, looking at the ET7, for example, the quality is outstanding, and very, very much something any German premium to luxury manufacturer would have loved to have in their portfolio, from as far as I can see. And I think if it's well received, we'll see with the customers in both China as well as Europe. And then this will be a huge blow to those legacy automakers, because they will be struggling and scrambling to turn around their big ships while still selling their profitable cars, while currently really being unsuccessful in launching their own EVs. I mean, I've just done a video about that. Maybe I can grab the slide here again. But if you just look at the sales of the Germans in China in comparison to NIO, like the Audi e-tron and so on. Let me see if I can find this slide. It's in here. It's really disappointing, to be honest. Also, I mean, those cars aren't super bad, I would say. They're obviously kind of remodeled, but if you look at this, these are the sales of those legacy auto manufacturers in China. Audi, I mean, you can barely see them lift off this axis here, right? And Mercedes is also not doing very well, despite they're now having 3 models. They originally only started with the EQC, but now launching 2 more. The only one who's really doing a good job right now, I would say, is BMW with the, what's it called, XI3. I may get this wrong, but they have shown quite a bit of a ramp here. But if you look at the steepness of the slope here, NIO's already scaling more, like steeper, faster than the competitors in the same average sales price field. And this will only possibly, presumably, get worse once NIO Park is online for the Germans there, because I mean, they have existing factories and they know how to mass manufacture, right? You could argue that NIO is only learning this. They are entering a years-old business there, and still currently doing better there at very high average sales prices. But of course, there are questions regarding NIO's growth, and that's also why today in the company earnings, maybe that's why they are speaking about this re-acceleration. And I think investors will have question marks around this until it's proven that this is actually factual. So yeah, I don't agree with this commentary here. Yeah, BMW is going to come out with the i7 this year, starting price more than 100K. Exactly, you get a better car with the ET7, and they don't have battery as a service. Okay, now you say, fine, battery swapping is not your thing. Then they don't even have the charging infrastructure, their own self-branded charging infrastructure in China. And then, very alarmingly so, the CEO of BMW is even questioning EV demand generally. He's basically pretty much against phasing out the internal combustion engine car. And then with this kind of a business culture, can you really, be innovative or be alert enough about the change that's about to happen? I'm not sure about that. On the other hand, kudos to BMW. They're doing a good job, at least in China, there with their EV. And I do think that there will be space for those kind of brands to continue to be successful. And actually, my hidden champion is Audi, to be honest. If you're asking me which legacy maker will be the most successful in maybe competing with NIO, I would be watching Audi. Although this number here looks terrible, of course, but this is, the old e-tron. And yeah, you could say most of the cars that are announced now are in concept stage. And so concepts are done easy, and most of them are not pure EV from scratch. And as I mentioned, it will take some time until they get to those, the other ones. But at least from what I'm seeing, what Audi is doing in terms of, how they're branding themselves, how they're thinking about it, how they're working on stuff like charging infrastructure as well. I think they know what's up. They know that they have to change. And I think, I know some of them because I've been working with them in China as well as in Germany. And I think they have capable people, intelligent people, and they will be able to do it. So, and they, this is not a NIO takes it all kind of business case. I'm not making that one. Tesla might be different. They think they can really overtake everything and everybody. But I'm not entirely sure if this will be the case. Yeah, this Tesla is so good at not even having to advertising, because it's born out of a very natural, organic movement. And well, then they have Elon Musk, and he of course also does lots of stupid stuff, which gets him into the news and people talk about it. And so, and frankly, Tesla is just a great product, right? So it's selling by its own. And if you want the most advanced EV at a very good price point and the best, the best tech specs, then you need to go with a Tesla. So that's why they don't need advertisement. That's why they're selling like hot dumplings. And that's why Tesla will be doing great, I think, in the next couple of quarters as well. Yeah, exactly, Matthew. Legacy automakers will be caught between keeping up bottom line with spending to make EVs on a mass production level. Yeah, as I mentioned, Volkswagen announced to invest $70 billion in kind of pumping up their fleet and working on software. And if you listen to Herbert Diess, and by the way, I think he's also doing a great job at kind of transitioning or at least communicating it to the outside. So who am I to judge how good his job is that he's doing? But just how I'm personally perceiving him, I think he's doing the right steps. And but on the other hand, this is very expensive, and I do doubt that Volkswagen is making a lot of money on their ID series. And while the ID cars are doing considerably well in Europe, and frankly, I also like the ID3 looks, and I think it's remarkable what they have done in the short term. But the ID, those models, they are really struggling in China. The China CEO of Volkswagen, he, I think right now already has moved on because they didn't even fulfill their China delivery numbers from last year. And Chinese users are, if there isn't a nice screen and good software inside the car, it's a really hard sell. And they're not selling it because of the brand just anymore. But of course, you also see them adopting. They're doing something similar to NIO houses, having nicer looking shops as well. And of course, they're also having this fresher looks, fresher branding. So they're doing the transition, but it's not necessarily going to be easy. And now they have other issues also with the Ukraine crisis. And Tesla Gigafactory Berlin will actually be hurting them a lot as well in their home turf. And they have lots of legacy to carry, not only on the vehicle architecture side, but also, frankly, with the employees, with the unions, in the past they got lots of subsidies. Now everybody gets subsidies, and preferred so EVs are getting subsidies. It's really a tough time for them, I would say. And especially on the software side, I'm not sure how capable they will be. That's an interesting one, BYD versus Tesla. Yeah, because I'm actually always just talking about how XPeng is maybe more in direct competition to Tesla. And actually it might be BYD, which is selling massive numbers of cars. And sometimes I get like commentary in my Twitter, in the YouTube comments, asking me, oh, why don't you just invest in BYD? It's a much easier invest. And personally, I've been looking at BYD back in 2008, 2010, when I was working at the Beijing Chamber of Commerce, and they were the only ones around really building electric vehicles. And I never invested, but I'm just not convinced by their products. And they also do this copycat thing, like building stuff like looking similar to the ID.3. And to me, that's not something really disruptive, despite they're doing a really good job at catering their certain target group, which is, frankly, 200,000 RMBs to 400,000 RMBs price range. The BYD Han is, of course, also doing a good job in terms of being like kind of a more premium vehicle as well. And they have the in-house technology. They might be more vertically integrated. So all good stuff. But for me, this is just, no, it's not the type of company that I'm going to invest in. And frankly, they will be doing fine. It will be doing great. Gonna sell heaps of vehicles. But it's certainly just not this business model innovation that I see from NIO. And I'm already invested in Tesla, so I'm not looking to get into a second company that is doing this type of vertical integration thing. The cost, looking so much at the cost side of things. That's why I'm going into NIO, because NIO is quite different from the setup. It's a different business model. Their focus is not declining cost curves and driving down manufacturing cost as much as they can. They're more lean on this manufacturing side and not building their own factories. At the same time, focusing on different revenue streams as well in the future. And I think like their view is more on the user side, like increasing the return on investment which they get on user acquisition. So for them, basically, every car is just an install base, like in an e-commerce company. You just want to get the users and then retain them, and then over time squeeze out as many dollars as you can out of this one user that you are captured and you can retain. And that's why they go at this wealthy target group. That's why it seems so expensive in this marketing approach, but I at least take this bet that this can be an interesting business model going forward, which can be very profitable and having a very unique advantage over all of the other businesses mentioned, like the legacy auto, BYD, and even in comparison to Tesla. So that's my kind of setup, how I think about it. I'm not saying you shouldn't invest in BYD, you shouldn't invest in Tesla, you shouldn't invest in Volkswagen if you want. That might be also an interesting investment, right? Thinking like, why not bet on the transition of Volkswagen and say, Volkswagen is cheaper priced in comparison on a price sales multiple than, for example, a Tesla. So you could also YOLO into Volkswagen and say they will manage the transition in a couple of years. They will still be selling 10 million cars annually, and they will be all electric. May also be a bet, but I won't take that one. Exactly. NIO has branded itself right from the get-go, international company, premium segment. Yep, the racing cars, almost forgot about that. Yeah, it's quite different in these regards. You know, on a negative, we could also say like this is gimmicky. This is just nice to have, but I just think that this is mostly misunderstood by investors, and so yeah, we'll see 5 to 10 years out. Yeah, GM, 26 vehicles. I mean, Giga Berlin already has produced more vehicles than that. There might be more ET7, maybe even more ET5 already around. So it's not that easy as people think. That's an interesting one. Regarding sourcing components, yeah, I mean, like, I met the co-founder of NIO Chapter before, and he was previously, if I am correct, at Ford in China, like general manager, and maybe also General Motors. Anyways, he's having this huge experience of sourcing and also yeah, coming from this background, obviously. And what they've done, they have built this one company, Next EV, which is now XPT and now wholly owned by NIO. And this one is actually doing this EV skateboard. And it's also one of the urban myths that NIO is not vertically integrated. They are at those parts where they have to be. Of course, they are maybe not as much as they could be. And NIO also spoke about this. I think their own self-made chips are in the books at some point in time. So we see the hirings for that. And I really think that the current crisis, the chip shortage, has taught them a valuable lesson as well. And I do think that they will be doing things differently strategically on the sourcing part. But frankly, I think the whole industry will. I think this has been a huge blast to the industry. Look what's going on with BMW and Volkswagen right now in the Ukraine. They're having huge issues. And I think, well, why has Tesla been doing the best and scaling throughout this crisis at enormous pace? It's because they are totally vertically integrated, have this really very seamless supplier base, it seems. But of course, also they have things sourced from outside, and they have done tricks as well. They have left out some of the chips. They did get rid of the radar, which was coming from a German supplier, which wasn't available. And so they are taking steps which, for example, a NIO wouldn't do, because they have a certain promise to quality. And so ultimately, Tesla is more aggressive and more successful with that. So they have certainly done the right thing. And I think nobody minds if their Tesla car doesn't have the latest chip necessary for full self-driving in the current car and can just get it with a hardware upgrade and stuff like that. So NIO didn't do a good job at that. And so back to your question, I think they actually should take those measures in order to improve on that. And I do think that Legacy Auto doesn't have a much better position on these things right now. I can imagine. I think possibly certainly they have more experience and maybe higher purchasing power, bargaining power, but they have been heavily affected by this. Polestar, yeah, I don't know, man. Yeah, I know there's a spec that you can invest in now for Polestar. I'm not a fan of that. Actually, if you look at it, Geely is quite interesting as a Chinese company, having stakes in Daimler, having Volvo and Polestar ultimately. So, and I've never invested in them either, and I don't like this. Some of the initiatives, like with the flying car stuff, similar to XPeng, I think this is just gimmicky and won't happen. But other than that, certainly Geely, I think, is successful. They are also, by the way, copying NIO with the Seeker brand, maybe a little less expensive, but having similar setup to what NIO is doing regarding the business model and things like that. Then Geely is also doing battery swapping. And of course, they're also, with Polestar and Volvo, that's quite interesting. So when I saw the Polestar in person, I think that was the first one in 2018, possibly in China at CES in Shanghai. I have to be honest, when I saw it, it didn't look high quality built to me. It's not my type of design either. I think it looks like has having some design flair certainly to it. So it's looking special. I don't like the looks too much, but that's just my personal preference, right? And so I'm not like in love with it, or I don't really like it from that perspective. But what was really the downer for me was like I didn't like the quality feel it had to it, and but I'm not quite sure about the price point, so I cannot compare it directly right now. And I also haven't seen the second edition yet from the inside. From the outside, I've seen it, and that one looked quite good actually. And so there will be brands like this which are interesting, and I think also, I mean, Volvo usually is very good at also the quality in terms of long lasting, and it also should be actually also good from the interior and stuff. And but I look at a certain type of optionality if I'm investing, and NIO has it, right, in terms of the different, they're doing something new and from scratch, and it's a different type of company. And I remember I mentioned it on the channel before, but I also mentioned it on Twitter and so on. I said like NIO will be a business case study at some point in time. And just recently, I saw that now at Harvard, there was recently NIO was shown, and I think they even had a call with the president of NIO, if I'm correct. I have to look into the specifics, but it's now a case study, and for a reason. So yeah, it's different. Everyone invests in what they believe in and what they like. Go with Geely or Polestar or GGPI. Exactly, that's the spec. Thank you, Richard. If you like the designs, if you like the prospects, and at least doesn't give you this China fear issues that are around with NIO. So of course, the shorts must be very happy about all of the recent events, not only with the war, but also the delisting. And so, yeah, that's really, really, really bad for NIO, of course. Do I think that the loss of operation is going to increase until the ET5 is out? I think this quarter may have been a temporary peak, to be honest. Yeah, depending on how the R&D spend is going. I think they have now built like a vast chunk of the battery swap stations necessary for now. I need to do the calculations again, but I think the ratio of battery swap stations to cars in the fleet must be pretty good right now, in terms of that they can launch many more cars in the road until those swap stations would get congested. And so maybe they can scale back on the ramping of the battery swapping for 1 or 2 quarters now, and then I would expect, if the ET5 is coming and they're expecting more volume, that they will once again maybe another Q4 ramp into battery swapping station infrastructure build out, charging network build out, and that once again may actually trigger more losses or we don't know. At that point in time, NIO may actually be profitable already if the volume is big enough. We'll see. And then R&D, we'll see how this will pan out between the new hirings that they're making, like how much of this will actually become kind of overhead, and how many new vehicles they're gonna launch and put out, at some point in time. Maybe after the ES7, the ET5 and the ET7 are launched, maybe it will take some time until there will be another iteration or new vehicles coming out. And then all of these testing costs will go away, the R&D costs will decrease. So I'm not sure if we should see increased losses there. But yeah. I'm not sure, like on the profitability side of things. Once again, I think we'll see the first profitable quarter maybe this year, and then for full profitability, it could be next year. It's definitely in the books. I think it's possible. Maybe 2024 also possible, because as I mentioned before, it's possible that NIO is kind of reinvesting a lot of the free cash flow and basically trying to prioritize growth over profitability. Once again, this platform internet business type of thinking. Here's an interesting question regarding the lithium iron phosphate batteries, which are being used increasingly by Tesla for their standard range models, because these battery types are more cost effective and have actually quite good overall attributes. And NIO already has also a similar type of battery, which they are just introducing, I think now bringing into the fleet. It's the 75 kilowatt hour battery. And it's in NIO's case, it's more of a hybrid, because they also have also a different battery composition. Also, some of the packs in the cells in the pack are of a different composition, in order to avoid some of the negative impacts that are usual with this type of battery pack, that you get really a decline in efficiency or in range in cold weather, and then also have problems with the state of charge reading in cold weather specifically as well. So NIO also bring them to the cars, but the issue there is that lithium is also now spiking in cost, and we'll see. Like I think overall this could be a big trend, but we'll see like how they going forward, if there will be implications, and hopefully we hear about this also in the earnings call now on the cost basis of those type of batteries. Exactly, Richard. And maybe these are good closing remarks, because I'm now on already for 2 hours, and I'm not sure if I should continue for another half an hour and then for the earnings call. I don't know. Viewers are dropping also a little bit. Let me know what you think I should do. But anyways, back to your comment, Richard. Most important thing is conviction. Without conviction, almost impossible to hold. That's true. Whenever a stock goes in the garbage, and we've seen that, like all of the growth names, I mentioned Palantir before, but looked like Teladoc is almost down 90% from their highs or something like this. I was invested in Cloudflare, which certainly had very nice gains, but then also sold off, I think, 60%. And so we've seen this all over the place. And so it's basically a reset of the valuations and the multiples. And I frankly did the same thing in the last couple of months. as I mentioned, I started selling in December some of my stocks and continued into January. And what did I sell? I sold stocks in which I had gains and which I didn't have conviction, in order to have more cash that ultimately at some point in time I can reinvest in my conviction names. So I'm very likely to end up with less names in my portfolio in the end, because frankly I cannot monitor like 30 companies, particularly in such a drawdown. And it's already enough to make sense of what's going on with the markets, and let alone geopolitics on top of that right now. And so if you don't really understand the company, it's really hard to stick to it, I would say. And at the same time, maybe also playing devil's advocate, don't fall in love with a company, take some profits. We had this other fellow here who claimed to have sold NIO right at the top at $65. So don't become greedy. If you think it's overextended, take some gains and reinvest them maybe somewhere else or something like that. But as I'm always saying here on the channel, on my conviction names, I'm usually not doing that, because and I'm frankly right now in the situation that I find it really hard to find my way back into the market. So with all of the stuff that I didn't sell, I'm just in there, and I'm now currently enjoying the gains of this rally. But it's very tough to buy the real dips. So for example, I didn't buy the Chinese names, most of them, during this very high uncertainty, I think 2 weeks ago was it. I didn't dare to do it, and I should have done it, right? But at that point in time, it seems like it's endlessly falling. And now I'm kind of with this issue that I may end up in the situation that all of the money that I've frankly was lucky to get out in December and January, I'm not sure if I get in with this money and the exact amount into the market again at a price that is better at where I've sold it off. So ultimately, also considering tax implications and something like this, it's very hard to time the markets and come around better in the end than simply by buying, holding, and dollar cost averaging. I'll see. I will make it public on the channel once I'm back with those type of things, with my new investments. My investment portfolio will look very different, but I'm not sure if it will outperform if I would have just holding on to some of these names. All right, that's it. Not many more questions. 2 hours of live stream. Earnings call coming up in half an hour. Let's see. If I'm staying up, I might do a separate live stream again on that one. Do you want me to cover earnings call? Well, it might be a long time. It's already almost 2 o'clock in Germany. All right, but yeah, thanks guys for watching. Really thankful for everyone tuning in. And yeah, I hope it was insightful, and I hope I can provide like the good and the bad. Ultimately, it's up to you to make your personal risk allocation. As always, NIO is risky, but I see tremendous upside opportunity. And so, NIO gang, happy to see you next time. Thank you guys for watching. And bye-bye. 再见.